Sunday, March 29th, 2020, Maneco 64, home of alternative economics and contrarian views. There's a lot of information out on the internet, on social media, on YouTube, Twitter, about the Patriots being in charge, that they've taken over the Federal Reserve, that the U.S. Treasury has taken over the Federal Reserve. I tend to disagree with that, and I'm going to go over the points that I think show that that's not true. One thing I would say right off the bat, if the Treasury and Patriots were really in charge, President Trump would have signed an executive order abolishing the Federal Reserve, canceling all the national debt, which has basically been created out of thin air with Federal Reserve funny money. So that's what I would say first. Yeah, so I'm sorry to blow people's bubbles. The Patriots haven't taken over. For me, the kind of patriot that would show that real patriots would be taken over would be someone like Davy Crockett. And you might think, what about Davy Crockett? Well, I'm going to put a story about Farmer Horatio Bunce below in the description. And it's a great lesson on what the original Constitution of the United States was supposed to be like, the intent of the founders, and the fact that Congress should not be able to confiscate wealth from the general public to give that wealth to special interests. And that's happening in spades right now. So it's kind of weird because I'm not even American. I was born in Brazil. I live in London, England. But yeah, I did learn American history at school in Brazil, at the American High School of Rio. When I went to university, I did a few courses in U.S. history. So yeah, it's weird that I'm trying to warn Americans from London and being originally from Brazil. And why am I doing that? Well, because I still think the original intent of the founding fathers was a noble intent, but I think we've gone way off track here right now, and it will affect the whole world, of course. So read the story about Davy Crockett and Farmer Horatio Bunce on the role of government. So before I go further and look at an article in the Washington Post that was taken out of Bloomberg, and a comment by the U.S. Secretary of the Treasury, Mnuchin, I wanted to show you this chart. And this is from the Federal Reserve, Board of Governors of the Federal Reserve System. They keep track of all these statistics. So this is the distribution of household wealth since 1989. And this is up until the second quarter of last year. And I selected the wealth component here, corporate equities and mutual fund shares. This is where we're seeing the markets implode. And if you look at who owns most of that, 7/8 of that, or 0.875% of that, is owned by the top 10% of Americans. As you can see, the bottom 90% only own 11.4% of all that corporate equity and mutual fund shares. The bottom 50 doesn't even own 1%. They own 0.7%. So that's one thing I would say. If President Trump and the Patriots have taken over in order to bail out the stock market, bail out corporate equities and mutual fund shares, yes, they're patriots, but not for the 90% of Americans at the bottom of the wealth distribution. They're patriots for the 10%, and especially for the top 1%. As you can see, the top 1% own more than 50% of corporate equities and mutual fund shares. So that's the first thing I would say about that. So I want you to listen now to Larry Kudlow. He's the chairman of the Council of Economic Advisors to President Trump. It's not Steve Mnuchin, excuse me. It wasn't Mnuchin who said what I'm gonna show you here. So let's listen to what he said.
That fund, by the way, will be overseen by an oversight board and an inspector general. It will be completely transparent. So the total package here comes to roughly $6 trillion, $2 trillion direct assistance, roughly $4 trillion in Federal Reserve lending power again.
So there you go. There's the 2.2 trillion package they signed the other day. And even President Trump, when he signed the bill, I saw the clip, he said that it was just over 2 trillion, but it would eventually go up to 6 trillion. Notice how he said 4 trillion will be Federal Reserve lending power. Well, that raises red flags for me, because the Federal Reserve is not federal. As we know, they don't have any reserves, as we know as well. And their lending power is derived from the American public. And I would say from the public all around the world, because we still use the dollar as the global reserve currency. So it not only affects Americans, but everyone around the world. So the Federal Reserve actually is like a parasite. They use your labor, your efforts to back the funny money that they issue out of thin air. So this raised a lot of red flags to me. Yeah, the Federal Reserve doesn't have any lending power. What they will do is that they will basically buy into the extra 4 trillion debt that will be lumbered on the back of the American public. So it's not just 2.2 trillion, which is bad enough, which is going to be lumbered on future generations through taxation, through the debasement of the currency that they're forced to use by legal tender law. So now the article in the Washington Post. So we'll go through this article, and I'm just trying to show you here, yeah, the Fed and the Treasury are working together, but this article hopefully will explain to you why the Treasury has not taken over the Federal Reserve. So let's go through Jim Bianco's article. The economic debate of the day centers on whether the cure of an economic shutdown is worse than the disease of the virus. Similarly, we need to ask if the cure of the Federal Reserve getting so deeply into corporate bonds, asset-backed securities, commercial paper, and exchange-traded funds is worse than the disease seizing financial markets. It may be. In just these past few weeks, the Fed has cut rates by 150 basis points to near zero and run through its entire 2008 crisis handbook. That wasn't enough to calm markets, though. So the central bank also announced 1 trillion a day of repurchase agreements, repo, and unlimited quantitative easing, which includes a hard to understand 625 billion of bond buying a week going forward. At this rate, the Fed will own 2/3 of the Treasury market in a year. Well, I think it's fairly easy to understand. I think this 625 billion of Treasury buying a week will help them buy the 4 trillion that Congress needs to borrow in order to help the economy. Well, and in that, the American public, of course. But it's the alphabet soup of new programs that deserve special consideration, as they could have profound long-term consequences for the functioning of the Fed and the allocation of capital in financial markets. Specifically, these are, while Mr. Bianco seems to be concerned about the Fed's functioning in the markets, I would say the best function for them would be to leave the markets alone and for the Fed to be abolished. But be as it may, let's keep going. So the first program is CPFF, Commercial Paper Funding Facility. Buying commercial paper from the issuer. That means they're not going to go into the secondary market. They're going to be buying commercial paper from private companies. Yes, there are no corporate equities here that they're buying, but what you need to understand, when they're buying through the bond market or the money market, they're helping the equity market. PMCCF, Primary Market Corporate Credit Facility, buying corporate bonds from the issuer. So they're basically buying bonds from Apple, Boeing, from big corporations, and they're buying it directly from them. So they're lending money to big corporations, the Federal Reserve. TALF, Term Asset-Backed Securities Loan Facility, funding backstop for asset-backed securities. SMCCF, Secondary Market Corporate Credit Facility. So they're not happy with just buying bonds directly from the issuer. They're buying it also in the secondary market, bonds that have already been issued, that have been sold off through this crisis. And they're buying bond ETFs also in the secondary market. MSBLP, Main Street Business Lending Program. Details are to come, but it will lend to eligible small and medium-sized businesses, complementing efforts by the Small Business Association. So this is the Fed doing this, not the Treasury. So do you really need the Fed to do this? You could do it directly through the Treasury. As I said, the Fed has no reserves and it's not federal. Let's continue. To put it bluntly, the Fed isn't allowed to do any of this. The central bank is only allowed to purchase or lend against securities that have government guarantee. This includes Treasury securities, agency mortgage-backed securities, and debt issued by Fannie Mae and Freddie Mac. An argument can be made that can also include municipal securities, but nothing in the laundry list above. So how can they do this, asks Jim Bianco. Well, it says the Fed will finance a special purpose vehicle, SPV. So this is basically a legalese, a legal entity created through the Treasury. So as it's created by the Treasury, it has a Treasury guarantee. So that's how they get around it. And I would say these SPVs are probably going to be offshore as well. Who knows? I don't think we'll be able to see. I'm not sure they're going to be that transparent, as Larry Kudlow said. The Treasury, using the Exchange Stabilization Fund, will make an equity investment in each SPV and be in a first loss position. What does this mean? In essence, the Treasury, not the Fed, is buying all these securities and backstopping of loans. The Fed is acting as a banker and providing financing. The Fed hired BlackRock Inc. to purchase these securities and handle the administration of the SPVs on behalf of the owner, the Treasury. In other words, the federal government is nationalizing large swaths of the financial markets. The Fed is providing, he says, the money to do it. No, the Fed is providing the credit on your back to do it. So we didn't need the Fed to do this. We could directly go directly through the Treasury. So that's why if the Treasury had taken over the Fed, they wouldn't have had to create these SPVs. They would just go directly in the markets and nationalize these assets. So another reason why I don't think the Treasury has taken over the Fed. This scheme essentially merges the Fed and Treasury into one organization. And he says, so meet your new Fed chairman, Donald J. Trump. I still don't agree with that. Because who's providing the money or the credit? It's not Donald Trump. It's the Federal Reserve. And it's unnecessary, in my opinion. What I think is happening is the Fed and the Treasury are working closer together. But I don't think Donald Trump is in charge of the Fed. In 2008, when something similar was done, it was on a similar scale. Since few understood it, the Bush and Obama administrations ceded total control of these acronym programs to then Fed Chairman Ben Bernanke. He unwound them at the first available opportunity, but now 12 years later, we have a much better understanding of how they work. And we have a president who has made it very clear how displeased he is that central bankers haven't used their considerable power to force the Dow Jones Industrial Average at least 10,000 points higher, something he has complained about many times before the pandemic hit. When the Fed was rightly alarmed by the current dysfunction in the fixed income markets, they felt that they needed to act. This was the correct thought. I don't think so. They should have let the market collapse. Well, they never will, of course. Jim Bianco, don't agree with you. But to get the authority to stabilize these private markets, central bankers needed the Treasury to agree to nationalize or own them so they could provide the funds to do it. In effect, the Fed is giving the Treasury access to its printing press. Again, the Treasury doesn't need the Fed to create money, because the money that the Fed creates, their printing press, is on the back of the American taxpayer. Again, shows to me that the Patriots are not taking over. The Fed's still tightly in control. They're still the master. They're still the lender and on your back. This means that in the extreme, the administration would be free to use its control, not the Fed's control of these SPVs, to instruct the Fed to print more money so it could buy securities and hand out loans in an effort to ramp up financial markets higher into the election. Why stop there? Should Trump win re-election, he could try to use these SPVs to get those 10,000 Dow Jones points he feels the Fed has denied everyone. If these acronym programs were abused as I described, they might indeed force markets higher than valuation warrants, but it would come with a heavy price. Investors would be deprived of the necessary market signals that freely traded capital markets offer to aid in the efficient allocation of capital. Malinvestment would be rampant. It also could force private sector players to leave, as the government's heavy hand makes operating in controlled markets uneconomic. This has already occurred in the US federal funds market and the government bond market in Japan. I would add it's already happening because the Fed is intervening in the government bond market already in the US. That affects interest rates, that affects equity markets, corporate bond markets. So we already don't really have a free market, Mr. Bianco. Fed Chair Jerome Powell needs to tread carefully indeed to ensure his cure isn't worse than the disease. So as you can see, this is not President Trump's cure, it's the Fed's cure, and the Fed couldn't do it directly. So they've joined together with the Treasury. And as I showed you, this program is actually helping the top 10%. As I showed you, they own 7/8 of all the corporate equities and mutual fund shares. The bottom 50% don't even own 1%. So is this really going to help the general public? Is it really patriotic? I don't think so. You might disagree with me. Please comment below. I will listen to other people's opinion. I'm just trying to warn people that I don't think the Patriots have taken over. Far from it. I think Wall Street has taken over, and they're using your credit to bail out their market. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, DTube, and Steemit. I wish you all a great rest of the day. Take care. Bye.